the street is even in the correct ballpark with where they think the Fed is going to be by this time next year, which is another, if we're doing it in 25 basis point increments, who knows, another 200 basis points by September of 2025. That is a Fed that is splashing the system with liquidity. I don't know that it's the right policy decision, but that is what the street consensus is looking for, even if it's a disappointment if they only give us 125 or 150 in the next year or so. I mean, it looked like even if they were on pause, we were going to have double-digit S&P earnings growth next year. So it's a bullish situation. It's not what I would do, but it's bullish.
Okay, so plus 200, splashing liquidity, and it's not quite a fire hose, right? Because they're only making back or cutting less than half of what they ramped up that 525 basis point super aggressive cycle. But Jeff, the key takeaway from you is, look, we're in a small cap rotation. Rotation is something that we've wanted to see and maybe needed for quite a while. So I guess that's the good news. But wouldn't it be better? Because when I think small caps, I think, okay, obviously, better value. In some cases, earnings are growing faster, although they are more leveraged. My problem with small caps is a lot of them are not profitable, where, some folks take a look at, let's say, mid caps. They'll say the S&P 400, right? They're also good value. Earnings are also growing strong, and all of them are making money. What do you think of that group?
Yeah, look, I'm at WisdomTree, and WisdomTree is an ETF house, but really what we are is an index house that wraps ETFs around them. And, if you think about the reference you made to small caps, the Russell 2000 index of U.S. small caps is about a quarter unprofitable, and that is the wrap on that index. That's basically how we do battle in small cap land. Remember that sometimes the market will come up with concepts that will justify rotations and then change those narratives later if they need to justify being bullish or bearish something that's on or off. And I say that because if you look at the market's internals, there is a clear delineation between who has fixed rate debt and who has floating rate debt. In the United States, it's something like only about 8% of U.S. large caps have any floating rate debt, but 30% of small caps have floating rate debt. And then here comes Jay Powell. And it was an aggressive tightening cycle up to the upside. When they went up to 5.25 to 550, we're now 50 basis points lower than that. And it looks like the street is going to get showered with rate cuts throughout all of next year. That is something that a lot of unsavory small caps, balance sheet question mark type companies are sitting here and loving it. It's just like anybody who's got floating rate debt on their household balance sheet. Suddenly you're looking at 200 or 250 basis points worth of respite on that. And the fixed rate debtors are saying, hey, what about us? Well, the what about you is you're going to underperform small caps, it would seem.